Good snowy Monday morning to you folks. This is Lee Gaus coming at you from the offices of EFG Group and International Futures Group here in Chicago. And today I want to talk about our featured subject, feeder cattle. According to the LAWG 647 model, and for those of you who have watched our videos in the past, you know that everything I do is based off of the LAWG 647 model. According to the model, feeder cattle have turned back bullish. And to give you an idea as to the potential strength of the underlying trend, this Friday it would take a close at or below 182.45 to turn April feeder cattle back bearish. That, according to the prices just before we came into video, would be about $33 from present levels. Now, taking a look at where it might head in the short term, we're showing short-term resistance may start coming in at 225, but frankly, the underlying long-term trend points to higher numbers. Also, we want to feature cattle. The cattle market has not yet turned bullish according to the model, but it needs to close at or above 152.95 this Friday, which is about $8 lower than present values. And we take a look at near-term resistance, perhaps around 162. But again, if we do get a close at or above the 152.95 level, this Friday, the long-term underlying trend is higher. Now, just to bring you up to date on a couple other commodities, May copper did turn the trend higher on Friday, while May cocoa turned the trend lower. There are a number of commodities that are getting close to trend changes that you may be interested in, and if so, you can drop me a note at lee@efggrp.com, and I'd be more than happy to share that with you. Also keep in mind that while I have a great deal of confidence in the LAWG 647 model, it is not always correct. There are times when the market does throw a head fake and does fool the model into looking for or calling a trend change when indeed a long-term trend change does not materialize. Keep that in mind. Also, if you're going to be trading futures, options on futures, or spreads, be aware that there is risk associated with trading commodities. It is risky, and be aware, be knowledgeable about the underlying risk that you assume when you trade futures, spreads on futures, and options on futures. This has been Lee Gaus coming at you from the offices of EFG, IFG here in Chicago, wishing you a happy trading Monday.